etc. But for now, let's welcome in Mihir Vora, Chief Investment Officer at Trust Mutual Fund. And he's joining us in our studios. Always good to see that. Mihir, great to have you with us here. Good morning. Thanks very much for your time. CLSA this morning is talking about 54 Modi stocks, 54 companies which are perceived as direct beneficiaries of PM Modi's policies, half of which are PSUs. I'm sure you've seen that report. Lots of those names: L&T, NTPC, NHPC, PFC, ONGC, etc., etc. What do you make of something like this? It's of course, a lot of interest about what can do well if the market's base case does come true on Tuesday. Your thoughts, Samir?
Certainly. See, the markets are hoping and looking forward to continuation of the existing policies, and the biggest thrust of the government has been to try to create as much as physical assets as possible, especially in the manufacturing space, but that needs to be supported by infrastructure and real estate, etc. So I think a lot of the PSUs in the space, utilities, the defense manufacturing, the railway-oriented stocks, some of the lenders to the infra, all of these fall into that broad, physical asset creation theme. So to that extent, I would not be surprised that if there is a continuity of the regime and the expectation and the market's outlook, which is more of the same, and maybe acceleration of the investments theme, then these are the kind of names which would do well. I would not restrict it to only PSUs. Of course, some of the PSUs are relatively cheaper, so there may be scope for some more re-rating. But in general, I think the fact that the policies should continue and all the thrust on manufacturing and infrastructure should continue is something that will be welcomed by the market once this question mark or uncertainty is past us.
Okay, well, for now, the market is down about 0.5%, but there are several stocks which are bucking the trend. So don't lose sight of that, especially the real estate names. Just look at that. Brigade Enterprises is now up almost 8%. Of course, there's been, a lot of positive news flow on the real estate space as well. Then something in the capital goods space, Thermax is up almost about 3%. Torrent Power is up, Godavari Power. A lot of these companies, right, looking pretty good this morning. So, yes, there are stocks that the street still likes despite all the volatility. Mihir, thanks for joining in on the show. I wanted your thoughts on once the election, verdict is out of the way and the market moves on, right? In all likelihood, of course, it will move on the upside. If yes, where do your preferences lie now? What are the pockets you think have still value and growth?
Basically, as we've discussed this so many times, that the local economy should continue to grow much better than the rest of the world. While probably the US is doing much better than expected, we still will be the fastest growing economy in the world, the large economy in the world. So I think local oriented stocks, and which includes financials, because ultimately if the GDP is to grow faster, financials have to do well. And to that extent, I think financials, having underperformed for almost a year now, should offer some good pocket of value. So that's one big area that I can think of. And even some of the construction companies, engineering companies, the cap good companies have become a bit expensive, but some of the construction linked EPC companies still offer good value. And of course, when you talk about the domestic theme, you also talk about discretionary, which is just about picking up. So the auto space, the discretionary space are spaces where we can see some more re-rating happening.
All right, Mihir, what about the premiumization theme? Indians want to consume differently. Some people say that there's a slowdown. Some say, well, the way they're consuming has changed. Everyone wants a better car. Everyone wants to drink better alcohol. Maybe if you were to talk about that, wear better clothes, better shoes. So how do you play that theme?
Absolutely. So that's the second thing that we are very bullish on, apart from physical asset creation, which is exactly what you said, premiumization. And that would include, savings being funneled into the capital markets. So then we are also talking about pockets like exchanges, like brokerages, like, wealth management outfits, insurance companies.
Just to talk about that, the equity play, these brokerages, CDSL and the likes as well. How much of the good news is in the price out there? Some of these, BSE, case in point, 600-700 rupees just a short while back. It's at 2,500 rupees plus.
Absolutely. So, one can obviously debate the valuations, but the question then in that case is, what is the long-term trajectory?
Right.
Are we looking at a 5-year, 10-year kind of a growth path for these segments? Because if that's the case, then one can really take a longer-term view and, play in these themes.
So some of these themes, as Nigel was talking about, people want better cars, bigger houses, perhaps more expensive houses, particularly in real estate, right? If you can't afford an expensive house, does it make sense?
1 minute. They don't want expensive houses. They want bigger houses, cheaper. Who wants expensive houses?
That's an ideal scenario where you get a bigger house which is cheaper, but that's not, that doesn't work in Bombay. But yeah, you want to tell us, I mean, if I can't afford a house in Bombay, at least I can buy the shares, right?
Certainly.
So do you think that it still makes sense to buy real estate stocks?
Certainly, because we are coming off the back of almost 8 years of stagnation in residential part. Commercial has been relatively better, but the residential did stagnate for almost 7-8 years, beginning 2013-14. So to that extent, we've just seen maybe a couple of years of uptick. And while I'm not betting on price hikes anymore in terms of as you said, the cheaper houses or expensive houses, but certainly volumes should pick up. And obviously, we should not bet on the 20 crore, 40 crore kind of ticket sizes, but the 1 to 5 crore range is certainly that some place that we can look at.
You guys were talking about the capital market plays, etc. But we just spoke with Ramdev Agarwal recently, and he was also others have also made the point that this explosion of F&O on the F&O side that we've seen as compared to cash market turnover. I mean, the difference, that ratio is some of the highest in the world, right?
Yes.
And the proportion is just very, very large as compared to the underlying market. And can this continue, or will once the new government comes in over a period of time? I mean, they'll give this a look, make it a little more sort of tougher to kind of participate on that side. We don't know. I mean, how but is that something which you think is a risk for intermediaries, financial intermediaries, especially I think exchanges, brokers, more than anything else?
Certainly, my guess is that they should not really tweak around with capital gains.
Not capital gains.
Yeah,
not capital gains. To be
maybe
clear.
make it a little more expensive to trade. So you could see some kind of fees being levied, etc. Because even the finance minister has expressed, and we have seen many voices.
Yeah, she was in Bombay. She spoke
exactly.
About that, yes.
Yeah. So to that extent, there might be some steps where at least it becomes a little more friction. There's a little more friction while trading. Right now, it's just too cheap.
Anything else, Mihir, you want to sort of leave us with any other sort of bets or that you're taking at this point?
No, I think we are just about at the cusp of consumption being revived. So while the government capex spending has done very well over the last 3 years, and it saw us through the COVID downturn, we are basically now betting that the other two levers, which is private sector investments and consumption, should pick up. So while the rural consumption has not really picked up, that's one bet one needs to take, because then we'll have a holistic recovery instead of a lopsided recovery, which is more towards only premium consumption.
And so QSR kind of names, I mean, from a listed perspective, or is it
QSR, I would still consider a little more high end. I'm talking about the lower end of the real consumption, which has not really picked up. If that picks up, then we'll have a really good overall recovery.
And that will happen. You think there'll be some sort of, I don't know, hoping for too much, maybe personal tax cuts or something? I mean, put more money in the hands of the consumer?
So the kind of consumption that we are talking about are really low end. So probably you can see some more targeted
transfers.
Transfers, exactly.
Okay. Any of these, spaces which have seen a huge pickup lately, whether it's defense, Indian Railways, electric vehicles. We were just speaking to the management of responsive industries. They make, vinyl floorings for railways, and they're saying that potential is huge. Demand is picking up in a big way. So any of these spaces that you think deserve merit even now, despite the run-up?
Certainly, because these are all trends and themes which are going to last for 5-10 years. Okay. And these have the full backing of the government.
But they've rallied a lot also.
See, the markets always look forward, and what matters is what is the TAM, the total addressable market. Okay. In some of these cases, we are really just starting from scratch, So to that extent, the growth path and the runway can be much longer in these cases.
Okay. By the way, do you have a view, Mihir? Paytm?
I mean, obviously, I can't comment on individual stocks.
Okay.
But all I can say is that when I was here last month, doing our NFO, there were three themes. We already talked about two. One is premium consumption. Second is physical asset creation. Third is disruptive business models using technology. So there is a bunch of stocks, 5-7 stocks, large stocks, which got listed in the last 2 years.
Right.
But I can see almost 20-30 more stocks which will get listed in the next 2 to 3 years.
Okay.
So that is one space where companies using technology to create new business model or disrupt existing models. That's going to be an exciting space for sure.
All right, Mihir, appreciate you joining in and giving us your view on all those sectors as well as themes. And by the way, congratulations. I believe it was your work anniversary, and this month is 30 years. So all the best.
Market, yes. Wow. Thank you so much.
And new challenges you've taken up. So we wish you well on that front as well, Mihir.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.